The escalation of tensions in the Middle East poses a significant threat to economies of countries in the Asia-Pacific region. This according to a commentary note by Moody's Analytics that says the key risk comes from higher oil prices. The note highlighted that although a de-escalation could remove the $10 risk premium that's been priced into crude, any further attack could force prices beyond the $100 mark. This could significantly hurt economies of countries in the APAC region who are net importers of oil. Moody's maintains that the surge in crude prices would raise prices of food, transport, production, derailing the region's already choppy progress on inflation. We're now joined by Harry Murphy-Cruz, economist at Moody's Analytics. Harry, thank you very much for joining us. Today we're looking at Brent crude hovering around the $90 a barrel mark. Where do you see prices moving from here onwards, considering that you're also adding a $5 risk premium, maybe? If the crisis escalates with Israel hitting back and this becoming a larger crisis in the Middle East, where do you see prices going then? If Israel does not retaliate but tensions continue to simmer, what will be the situation in these two scenarios?
Sure. So, as you say, all eyes were on oil prices over the weekend with Iran's attack on Israel. There were fears that that could send oil prices spiking. Thankfully, we haven't seen that come through. So, as you say, oil prices, they've been pretty stable over the last few days. That reflects two key criteria here. The first being that Iran did foreshadow these events being a one-off. That many analysts have taken to mean that this was more of a statement as opposed to something that was trying to cause significant damage. The second point that's kept oil prices relatively stable so far is exactly what you're talking about. There is that $5 or $10 premium, risk premium that oil prices currently have built in at the moment. So an escalation like this was well within that buffer. So we haven't seen oil prices move. Markets are also factoring in or assuming that the response from Israel will be relatively restrained. We've seen the global community, particularly led by the US, advocating for a very restrained response from Israel, very conscious of not wanting this to engulf into a wider Middle East conflict. And markets are believing that will be the case. Of course, there are no guarantees with this. We certainly could see oil prices move up above $100 if we do see a significant escalation occur.
Right. And you're absolutely right. But do you, in any scenario, see oil prices touching levels as they did after the Russia-Ukraine war broke out?
No, we don't see that as a feasible sort of high point in a scenario like this. Of course, there are risks. Around 20% of global oil, Iran has some control over through the Strait of Hormuz. So there are certainly risks that could come through. The disruption of what we saw with Russia was significantly larger. There is also certainly capacity within OPEC Plus to increase production if they do choose. So we don't expect oil prices to move near those levels that we've had previously.
In your report, you have observed that the prospect of rate cuts could be pushed back. How do you think countries in the Asia-Pacific are likely to be impacted, including India?
So I think across the board, we've seen over the last couple of days real risks that interest rates around the world could be pushed back, or even that we might see hikes come through before any cuts. The big story there being with what's happening with US inflation. It's stumbled over the last couple of readings, and rather than there necessarily being a June cut factored in, there is talk that may in fact be a hike. Ultimately, though, if we do see oil prices move higher, that will be higher inflation across the board, and Asia-Pacific will be no different. That'll come through two channels. First being that direct impact through higher energy and fuel costs, but also that indirect impact that we see in higher shipping costs that adds to the cost of sort of broader goods around the world. I think the US Fed will be the kind of benchmark to see where interest rates go. I doubt that we'll see central banks in the Asia-Pacific region leapfrog them in terms of cutting before we see movement in the Fed. And a large part of that has to do with central banks being conscious of currency depreciation. And if the Fed starts to delay cuts or even does hike, that'll put Asia Pacific currencies under even more stress.
Right. Now, you spoke about shipping containers. According to certain reports, routes in Southeast Asia to Europe have already seen a 40 to 45% increase over the last 1 year in shipping rates, and rates could rise by 20 to 25% more because of the escalating tensions. What would be your outlook, and how is that going to impact commodity prices, supply chains of certain critical materials?
It's been a tricky time for supply chains around the world, and you mentioned the tensions in the Middle East. That's certainly causing disruptions. We've seen a number of ships now start to go around the Horn of Africa instead of through the Suez Canal. We've also seen the Panama Canal have disruptions with droughts impacting the number of container ships that can go through each day. There's also been some broader industrial action in ports around the world, and obviously that disaster in Baltimore highlights the fragility of supply chains at the moment. Ultimately, though, we have seen a lot of resilience in supply chains. We have seen shipping routes able to withstand significant disruptions over the last 1, 2, 3, 4 years even. So while certainly a risk, we do expect supply chains to hold up.
Right. Also, when it comes to Russian crude, because of the price cap, in case we see the crisis in the Middle East escalating because of Israel and Iran, do you think Russia could be a net gainer in terms of crude oil exports?
That would be the most likely scenario, yes. So if we do see broader oil prices move up, that would put upward pressure as well onto crude coming out of Russia. Ultimately, obviously we do have those price caps on Russian oil, but we would see that start to move prices for Russian crude up higher if the broader supply of oil was starting to be constrained by what's happening in the Middle East.
Right. The BJP in its manifesto, just ahead, because India is going to elections in about 2 days from now, Harry, and one thing that the BJP, the ruling party, mentioned in its manifesto, that we are going to continue focusing on low inflation and a path of fiscal prudence in our next term. Do you feel that the inflation situation, the geopolitical situation will continue to remain sticky, and economies like India will have to continue being very cautious with their announcements and somehow be careful how they use their resources?
I mean, this most recent developments in terms of oil prices, it does come at a pretty difficult time for the broader Asia Pacific region in terms of inflation. It has been sticky in a number of economies, particularly places like Indonesia, in South Korea, Vietnam, Malaysia, Singapore as well. We've seen progress in bringing down inflation really stall in these economies. Higher oil prices certainly doesn't help in that scenario. For India, the moderation of inflation has been quite substantial. We've seen strong improvement. Ultimately, what we're seeing with higher oil prices would impact all net oil importers across the Asia Pacific region, and India certainly is no exception to that.
Right. What measures do you think that an economy like India can take to counter some of these geopolitical risks in the neighborhood in the Middle East?
It's the million-dollar question. It's incredibly difficult to get around circumstances like this, partly because they're so unpredictable. You know, where oil prices go from here is really uncertain. All eyes are on Israel over the next few days to see how they respond, and that'll be a key determinant as to where oil prices go. Ultimately, if we're talking broader supply chains, it is around diversification, making sure that there aren't too many eggs in one basket in terms of where inputs are being sourced from. But in a global crisis such as this, it's very hard for anyone to be fully sheltered.
Right. Very hard for anyone to be fully sheltered. Thank you so much, Harry Murphy-Cruz, for joining us with the latest update on oil prices and the situation in Asia Pacific because of the rising tensions in the Middle East. With that, it's a wrap on this edition of News Center. More news and updates continue right here.